Aloha and welcome to Java. Thank you all very kindly for joining me. It's Sunday, June 30th, 2024, and tomorrow is the first trading day of July. I hope everybody is enjoying their weekend so far, and I've got quite a few things I'd like to go over. We've got a short trading week coming ahead. The markets are closed on Thursday for the celebration of Independence Day. So with that, we've got a little bit of panda bear diplomacy coming on, and very cute. They're sent by China as kind of like a gift to the United States. Now I'm feeling a little bit under the weather, so I still think I will make it tomorrow. I'm going to do my best, but there's a slight chance I may not be able to. And no, it's not from, might be from chickens. Maybe I have chicken cough. I don't know. Anyway, I'm not wearing a mask, but I'm not around other people. So let's start with the risk indicators because I see a couple of interesting things happening here. We've got the MMRIs, the aggregate, basically, the relative strength of the dollar and the 10-year yield. Now, these are typically what the market looks at when they're gauging a risk. And we've got these moving kind of in an opposite direction. And to me, this is the basically a tell sign of a very possible turning point here. The reason I say that is as risk is rising, it's showing that actually retail traders are coming into the market. So very speculative gambling notion. They are the ones, retailers are the ones that come in last minute. They buy up to the high point, and they're the ones that get slaughtered when this all comes about. Historically, that's what happens. Not financial advice. I don't know what's going to happen in the future. Nobody does. However, I just look through historically what the markets do. So with this, we've got cryptocurrencies recovering from what they were saying was crushing prices. So I said there was, as I saw, low around 58,000 for Bitcoin. It didn't quite reach that. It didn't get below the 60,000. And I think if that doesn't, that's very strong measures for it. The ultimate lows I see when all of this kind of blows up a bit is 52 possible. Not likely right now, and I'm not waiting for that because it may not come at all. So what did we have last week coming into all of this is the PCE report suggesting 3 rate cuts starting in September. So the market thinks 3 cuts coming this year, a lot of celebrations, they think it's wonderful, they start buying up again, and 3 rate cuts are not coming this year, perhaps 2. We're already too late in the game, and they're too cautious, and the data points that they're saying that they go by are not coming out in time. So with that, I could be wrong, but that's just what I see as far as this. So we've got Fed may cut rates this year amid inflation concerns tied to Trump. And they're talking about the political battles. And I think this is possibly the most significant time that markets have been affected by politics. So, as I said, we've got a holiday shortened week. We closed on Thursday. Monday, we've got a PMI coming in. So checking numbers on a manufacturing Tuesday. Fed Chair Powell is speaking, so he typically moves the markets if he says anything off. We've got the job openings for May also coming in on Tuesday. So they will be watching unemployment. Wednesday's the non-farm, more jobless numbers, and from there we've also got FOMC meeting minutes coming out towards late in the afternoon on Wednesday. So that's going to swing through and create some very big volatility, I suspect, toward the end of the trading day on Wednesday, since it's closed Thursday going into Friday. So if you're still with me after all of that, I thank you very kindly, and let's move on. So behind all of this, what we've got in the real environment, pardon me, we've got the loans scheduled to mature in 2024. So this has the breakdown by colors. So this color on the bottom is multifamily loans. Office is the yellowish. We've got a kind of the reddish is the retail, and then lodging, and up here is industrial, and then other. So this is commercial loans, but when these crush, particularly lodging, The retail and the office and the multifamily, those will all pressure uh, basically residential real estate as well. And look at these significantly larger numbers coming in fourth quarter 2024. I am not bullish on housing right now for the pricing. I am expecting some great deals to be coming in. So keep your powder dry. If you are looking at real estate, we're going to be seeing some good deals coming in. So start shopping now so you're familiar with the prices. And at that time, when these things come out, be ready to buy. So we've got US banks bumping up dividends following the Fed's successful, quote unquote, successful stress tests. So the numbers they used for these stress tests were not nearly what we're looking at in reality for the drops that they've got. They're looking at a 30% drop in the stock market. So if that goes slowly, then that may happen. However, I think the numbers are much more significant. But the interesting part about this is now they're all celebrating and they have decided to start offering dividends on these. So building investor confidence in these portions, but it's only the large banks. So just similar to stocks, very polarized. So who's the winners? JP Morgan Chase, Bank of America, and Citigroup. So those three of the power banks. They are going to be the ones buying up all of the other assets for pennies on the dollar. There are some other banks that are going into that group. However, this is a severe imbalance. So I just want to make you aware of that. So we've got PCE for May 2024. They're talking about soft spending, people not spending as much because they don't have it. And that low inflation supports the soft landing narrative. Well, it's kind of grinding out. Yellen says she doesn't see inflation continuing. And then we've got a little bit of a reality check because over in Europe, they understand that whatever happens here basically is going to affect globally, and they are much smaller, so much more prone to the movements that happen here are basically leveraged there. So we've got the BIS is the Bank of International Settlements telling governments to beware of the market's sudden wrath over all of the debt that they have. The debt is a ticking time bomb. So the officials are warning that confidence could quickly crumble. And I love this quote because it's true. Things look sustainable until suddenly they no longer do. And that is exactly what's going to happen with this. I don't think it's going to be a soft landing. I think it's going to be an all at once, at least to a point. So with that, we've got a few things that are showing some of this. We've got iconic US car giant. We're talking about Ford. Could leave Germany. So they've reportedly announced massive management downsizing at the plant in Cologne. They have taken, I believe it was 10 of their current managing directors, and they're letting go of 6. They're only keeping 4. So this is significant, and this is the management, upper management. So we were speaking about this before when you see the unemployment, and it will start to hit the management, upper management, because that's where they're trimming it, and they will hire from below so they can save costs. So this is their major restructuring plan that they're looking to cut costs. So they really want to basically pay off their shareholders, basically. So going back to the large banks with the stress tests, 31 banks passed this test. Pardon me, I'm so sorry. So there was, along with a 30% drop in the stock market, the test included 36% decline in house prices and a 40% decline in commercial real estate, and only a 10% employment rate. So maybe the employment rate, the way that they calculate it, because they strip out a lot, but I think real unemployment rate, as I've said this before, is going to be mid-20s, low to mid-20s in the United States, and I think mid to high 20s over in Europe before they decide to put these plans into place, because that's when people will feel the pain and will be asking for the solution. So going back to the politics of all of this, we've got this character right here. He is currently in charge of California, and he's ready for the emergency that's going on in the United States. So my columnist, and I've been speaking with a couple of you about this, but he's poised for this. And his VP will be one of two women that you will very much recognize. One whose last name starts with O and ends with Ama, and the other one that ends with Inton. So we've got war games. Want to talk about this? This is kind of funny. So we've got Naval War Games Partnership in Hawaii, featuring 29 countries. So we've been watching them deploy a lot of troops to this area. Now they're having what they call exercises, and they're running their war games. And so they are using as an excuse the North Korean and Chinese threats rising also to Taiwan and Philippines. And they're looking to lock in defense partnerships with Asian allies. So in response to this, North Korea calls this coalition, South Korea, US, and Japan, the Asian version of NATO. So Asian NATO, or E-NATO for Eastern NATO. Which one do you like better? Let me know. Okay. Why is all this war stuff going on? Well, first of all, distraction. Secondly, continued strengthening in the US dollar. So as they ramp up this weaponry, the US dollar is backed by the military strength. So they've realized they cannot lose sight of this. And then also with the funding. So let's go through a couple of these. We've got an implied warning to China. The United States deployed the F-22 Raptors in South Korea, so right on the border, North Korea. They've got a research expert that has irrefutably established that missile debris in Ukraine is from North Korea. And we already know Russia has been purchasing weapons from them. So with this, we've got an answer to this, a couple of answers. First one up here, the helicopters. I want to bring your attention to this one because this one is large. The Marine Corps has declared initial operating capability for the AGM, that stands for air-to-ground missiles, at the joint to be used under Viper attack helicopters. So these are major, they say an upgrade is a major upgrade over the Hellfire missiles that they were using before. So these are allowing going deeper into the territories, and then these missiles are very, very effective. So could be a bit of a game changer in certain areas, especially mountainous terrain. So with this, we've also got the other side of this is the funding and bolstering of the United States GDP, the little secret underneath. The United States signs a new $4.5 billion Patriot missile contract. So this is with Lockheed Martin. They're going to produce over 800 of these, and all of the hardware under the deal. They also get within that basically maintenance contracts for a certain term period of years. And then with this deal, they typically on a military contract like this, you get a renewal period. So they are paying their friends, Lockheed Martin, the continued military industrial complex. And in return, they'll tell you most of this money, first off, is coming back to the United States. Well, sort of, but only through the rich who are pocketing a great portion of it, and a lot of it that is going missing, whether it's through the Pentagon's defense budget or other deals. So my voice is still holding up. I'm surprised. Now, I've got a couple of, okay, so this is not fun, but Hurricane Beryl forecast to become a Category 4 storm as it's in the southeast Caribbean. Okay, so the hurricane season is starting early this year. I think that's due to a couple of other things, and they're kind of being helped along a bit. And I don't mean climate control or climate change. Climate control is probably appropriate. So anyway, if you are in this area or in any of the main areas that we've been seeing unusual tornadoes, just stock up, be cautious, be careful. And I've got a couple of other funny stories wanted to bring to you. The first one is this one in the middle, exploring China's new quantum computer prototype with a digital reporter. So this actually happened a couple of weeks back. It's not functional yet. Quantum computing is still a bit of a dream, but they're all working on it. If they do get the quantum computer working, that could be very bad for Bitcoin and cryptocurrency in general. However, could also bolster it if it goes the other way. So with that, we've got a civil servant robot commits suicide. So what happened is this poor robot, the android threw itself off the stairs after being employed for less than a year at City Hall in South Korea. So administrative officer robot shows up every day, 9 to 5, has got an employee card, feels sorry for it because it's been working in politics for a year and just couldn't take it. So what did it do? He worked from 9 to 4 p.m. transporting documents around the building and then basically kind of showing visitors around and helping them and trying to promote the city. All of a sudden, it started spinning in one place as if something was wrong and then fell down the top of a staircase, and that was the end of that. So all they've said about it is that they've collected parts of the robot and it's going to be analyzed by the manufacturer. So what do you think about that? They're saying that robot did not have dark thoughts. I don't know. We could have counter programming going on here. So with that, thank you all kindly for being here. I hope to see you in the morning. And until I see you again, my friends, stay free.